Have you been paying for life insurance for decades and wondering if you still need it after 60? If so, you are asking exactly the right question. Because after 60, life insurance is no longer an automatic yes. It becomes a practical financial decision. And for many retirees, the answer changes. When you were younger, life insurance usually had one main job. It protected the people who depended on your income. If you died too soon, the policy could help replace your paycheck. That made perfect sense when you had children at home, a mortgage, and many working years ahead. But retirement changes the math. After 60, many people have fewer financial dependents. The mortgage may be smaller or already paid off. The kids may be independent. Retirement accounts may have grown. And your financial priorities may be very different now. So the real question is not, do people over 60 need life insurance? The real question is, does your life insurance still solve an important problem? If the answer is yes, keep looking at it carefully. If the answer is no, you may be paying for coverage you no longer need. That is what we are going to sort out today. Let's start with the biggest mindset shift. After 60, life insurance stops being a default product. It becomes a purpose-based tool. If there is no clear purpose, the policy may not make sense anymore. And that single idea can save people thousands of dollars over time. So when does life insurance still make sense after 60? The first reason is to protect a spouse. If your spouse would struggle financially without you, life insurance can still be valuable. This can matter when one spouse provides a much larger share of the household income. It can also matter when the surviving spouse would face a meaningful drop in cash flow. For example, imagine a couple where the husband has a large pension and the wife has only a small Social Security benefit. If he dies first, her monthly income could fall sharply. A life insurance policy could help fill that gap. In that case, the policy is still doing a real job. It is protecting the surviving spouse from a major income shock. The second reason is to cover debt or final expenses. Some people reach retirement with no mortgage and no major loans. Others do not. You may still have a mortgage, a home equity loan, or other personal debt. You may also want to avoid leaving funeral and end-of-life expenses to your family. If your savings can easily cover those costs, you may not need insurance for that purpose. But if paying those expenses would place pressure on your spouse or children, then some coverage may still be useful. In other words, insurance can still make sense if it prevents a financial burden from landing on the family. That is a valid reason to keep a policy, especially if the premium is reasonable and the need is clear. The third reason is legacy planning. Some people simply want to leave money behind. Maybe you want to help your children. Maybe you want to leave a gift to a grandchild. Maybe you want to support a charity, church, or other cause that matters to you. Life insurance can be one way to create that legacy. This may be especially useful when much of your wealth is tied up in a house, retirement accounts, or other assets that are not immediately available as cash. A death benefit can provide liquidity for beneficiaries. That can make some estate plans easier to manage. For some families, it is not about replacing income at all. It is about creating certainty. The fourth reason is support for a dependent child or family member. This is one of the strongest reasons to keep life insurance after 60. If you have an adult child with special needs, or anyone who will need long-term financial support, the policy may remain very important. In that situation, the insurance is not old baggage. It is an active piece of the family's long-term plan. Now let's flip the question. When might you no longer need life insurance after 60? The first sign is that no one depends on your income anymore. Your children are independent. Your spouse would be financially stable without the policy. The second sign is that your major debts are gone or fully manageable. If the house is paid off and your savings are healthy, insurance may no longer be filling a gap. The third sign is that your assets already cover your goals. If your estate can handle final expenses, support your spouse, and still leave the legacy you want, then the policy may be redundant, and redundancy can be expensive. The fourth sign is that the premium is becoming a burden. This is especially important with policies whose costs can rise over time. A policy that once felt affordable may now be draining retirement cash flow. That money might be better used for healthcare, emergency reserves, long-term care planning, or simply preserving flexibility. In retirement, every recurring cost deserves scrutiny. Here is the trap many people fall into. They keep a policy not because they still need it, but because they have already paid into it for years. That is understandable. But past payments do not automatically justify future payments. What matters now is whether the policy still serves your current life. So here is a simple 5-question check. Question 1. If you died this year, who would face a serious financial problem? Question 2. How much money would they actually need? Question 3. Could your current savings and assets already cover that need? Question 4. Is your policy the simplest and most cost-effective way to solve that problem? Question 5. Are the premiums worth what the policy is still doing for you today? If your answer to the first question is nobody, that is a big clue. If your answer to the third question is yes, that is another big clue. And if the premium feels painful, that clue gets even stronger. That does not mean you should cancel immediately, but it does mean the policy deserves a serious review. Let's look at 2 quick examples. First, imagine Linda, age 67. Her home is paid off. She has retirement savings, no dependents, and enough money set aside for final expenses. Her children are financially independent. She is still paying a meaningful premium on an old life insurance policy. For Linda, the policy may no longer be necessary. It may have been useful 20 years ago, but today, it may simply be a habit. Reviewing it could free up money for current retirement needs. That is not a loss. That is good financial housekeeping. Now imagine Robert, age 72. His wife would lose part of the household income if he died first. They still have a mortgage balance, and they want to leave money to support a disabled adult son. In Robert's case, life insurance may still be doing exactly what it should do. For him, keeping coverage may be completely reasonable. So the answer is not based on age alone, it is based on financial purpose. That is the key idea. After 60, you do not keep life insurance because you have always had it. You keep it because it still solves a problem that matters. And if it no longer solves a real problem, then you should at least consider whether that premium could be used more effectively somewhere else. Retirement is about simplifying. It is about aligning your money with your real life now, not your life from 25 years ago. That is the lens that matters. Before making any final decision, review the type of policy you have, the current premium, the death benefit, any cash value or surrender terms, and the financial needs you are trying to protect. Do not cancel a policy until you understand what you would be giving up and whether replacing it later would be difficult or expensive. If the numbers are unclear, consider reviewing the decision with a qualified financial professional who can evaluate your situation without relying on a one-size-fits-all answer. Ask one simple question. What problem is this policy solving for me today? If the answer is vague, that tells you something. If the answer is clear, that tells you something too. So do you still need life insurance after 60? Maybe. But only if it still has a real job to do. That is the standard. And that is how smart retirement decisions get made. If this helped you think more clearly about retirement and financial choices, subscribe to the channel. And if you want, leave a comment with one word: keep, review, or cancel. That one word may tell you exactly where you are in the decision process right now.